Hey, what is going on, guys? My name is Nick, and in today's video, we need to discuss TD's massive $13.4 billion acquisition of First Horizon Bank, which is their biggest acquisition ever. As many of you would know, TD Bank is my favorite Canadian bank, and it's also the second biggest in Canada, only being behind RBC. But it's also becoming a very significant player in the US finance industry, especially through this recent acquisition, as we'll discuss in a minute. TD also just reported outstanding end-of-year 2021 earnings, so I'll be sharing my analysis and thoughts on TD stock to see if it's a buy right now in 2022. Anyways, no more preamble, let's get straight into the video right after you destroy the like button and subscribe with those bell notifications turned on. I also want to thank the Daily Upside for sponsoring today's video, but more on that later. Alright, so let's first discuss TD's massive $13 billion acquisition, and then we'll get into their earnings report later on to figure out if the stock is a buy. So on Monday, February 28th, TD announced they'll be acquiring First Horizon Bank based out of Memphis in the US for $25 per share, or $13.4 billion in an all-cash transaction. And guys, I actually found out about this huge acquisition through reading the Daily Upside, making them the perfect sponsor for today's video. The Daily Upside is a free financial newsletter that shares some of the most important and engaging stories in business every weekday. Basically, they take the hard work out of researching stock market news by providing a 5-minute summarized newsletter each morning, which I've honestly found to be incredibly helpful and actually entertaining to read. For example, they detailed an entire article on TD's recent acquisition, where I found out that TD is going to be the 6th largest US bank, having over 1,500 locations and 10.7 million customers in 22 states. They also say TD is offering $25 per share, a 37% premium to First Horizon Friday close, for First Horizon's presence in the Southeast, where TD currently holds just a low single-digit market share in some cities. Before the announcement, FHN stock was trading for around $18 per share, but then on Monday it jumped 30% up to $23.70 per share, which is only about 5% below the buyout price of $25 per share, suggesting that investors are quite confident this deal is going to go through. The deal is expected to close in TD's first quarter of fiscal year 2023, but US regulators have stepped up their scrutiny of bank mergers following an executive order by President Biden last year that encouraged tougher antitrust enforcement. So there is, of course, still some risk to the deal that it doesn't go through, which is why First Horizon stock is not trading at $25 per share, but I personally think it's very likely to happen. Anyways, make sure to click the link in the description to sign up for the Daily Upside completely for free. There's absolutely no downside, and now with that said, let's get back into the video. So technically, you could buy into FHN stock today and get a nearly 5% guaranteed return by the time this acquisition closes, which is expected to be around November 27th. And then once it does close, you'd also have TD shares at the end of it all. Personally, I'm not going to be buying FHN stock to try and take advantage of this arbitrage opportunity, even though I think it's going to go through. It's probably just not worth it for me. I think I can get better returns elsewhere. Anyways, if we add this $13.4 billion of equity to TD's US market cap of $141 billion, this would bring them to a post-acquisition value of nearly $155 billion, being tied for Canada's biggest bank alongside RBC. Now this is crazy, guys. TD could become Canada's biggest bank within the next year once this acquisition goes through, if they continue growing faster than RBC, which is very likely in my opinion. So now here's why this acquisition deal is so great for TD shareholders. TD says the transaction is expected to be immediately accretive at closing to TD's adjusted EPS and over 10% accretive to 2023 expected adjusted EPS on a fully synergized basis. The transaction is expected to result in a fully synergized return on invested capital of 10% in 2023. The purchase price represents 9.8 times multiple of First Horizon's 2023 expected fully synergized earnings and 2.1 times multiple to First Horizon's estimated tangible book value at close. So despite paying a 37% premium to the market value of First Horizon just a few days ago, TD is actually getting a really good deal because this is going to be accretive for their EPS, meaning their EPS will actually rise immediately once they acquire this company. Furthermore, TD's CEO Bharat Masrani said that the deal provides TD with immediate presence and scale in highly attractive adjacent markets in the US. Now, if you've been following my channel for a while, you'd know that TD is the one Canadian bank with the largest and fastest growing presence in the US, which I personally believe is the reason why it has outperformed many of the other Canadian banks over the past 5 years. Even reading from the Daily Upside, they say Royal Bank of Canada, Bank of Montreal, and Canadian Imperial Bank of Commerce have all sought M&A deals in the US, but none have been as aggressive as TD. So clearly the US offers incredible growth opportunities for banks, especially those that are already established like the Canadian banks, and they're looking to take market share from the smaller and newer US banks. All right, but now let's get into TD's Q1 2022 earnings report that was just announced a few days after this acquisition was, to see if the stock is a buy. So TD reported adjusted net income of $3.8 billion, up 13% year over year, and adjusted EPS of $2.08, up 14% year over year. They also saw 4% revenue growth year over year, while expenses only grew 3%, and then they also saw strong volumes across all of their businesses. Then we can see they managed to maintain a common equity tier 1 ratio, or CET1 ratio, of 15.2%, which is honestly incredible and well above the threshold that regulators require. And then they also repurchased 7.5 million common shares in the quarter. Now, if we dig into their different business segments, we can see that TD's Canadian retail business net income was up only 11% year over year, but on the US retail side, their net income was up 30% year over year with only 6% revenue growth, which was the same growth that the Canadian side saw. And this huge difference is because expenses were up 8% year over year in Canada, while expenses were actually down 4% year over year in their US operations due to prior year store optimization costs and current year productivity savings. Overall, I think this alone proves why TD is investing so aggressively into the US, because there's so much opportunity for growth and expansion and optimization. Now, if we calculate TD's EPS over the 12 trailing months, it ends up being $8.17, which is a huge rise over the prior year. However, this growth rate will be tapering off in 2022 to a more normalized level of about 10 to 15%, according to analysts, so I would not expect a crazy amount of EPS growth and revenue growth moving forward. But if we take TD's current share price of $98.54 and divide it by their adjusted diluted EPS in the 12 trailing months of $8.17, we get a trailing price to earnings ratio of just above 12. Comparing this to all of the other major Canadian banks, we can see that TD's trailing PE ratio is still on the high end, but it is cheaper than RBC after this latest quarter. But honestly, based on TD's expected earnings growth rate into the future, I think this makes sense. For 14% adjusted EPS growth in their last quarter, this puts TD at a price to earnings growth ratio, or a PEG ratio, below 0.9 right now. And even if we use analysts' forward 5-year EPS growth rate estimate of 17.5% per year, their PEG ratio falls below 0.7, which I think is incredibly cheap. However, it is of course highly dependent on if TD can achieve this growth rate well into the future, because 17.5% is faster than their previous growth rates. But with the Bank of Canada having recently announced a 0.25% interest rate hike, and many more that are on the horizon, this should increase TD's net interest margin substantially over time. So with a higher net interest margin, this will result in higher net interest income over time, because they will get higher interest rates on their loans, while they won't have to increase savings account rates as much, which is the amount that they pay out. Here they say based on a 0.25% increase in short-term interest rates, which literally just happened, this results in an additional $394 million of net interest income over a 1-year period, assuming everything else remains constant in their business. In terms of TD's annual net interest income, this really doesn't represent a whole lot extra. It's only about 1.5% more, but we do have to remember that this is essentially pure profit, because TD doesn't have to work any harder to achieve this extra income. It's literally just the interest rates rising that's making them more profitable. All right, so in conclusion, is TD Bank stock a buy in 2022 right now after this past earnings report and the recent announcement of their acquisition? Well, to be honest, I actually think it is, even despite the stock having gone on an incredible run in 2021. With the Bank of Canada having just announced the 0.25-point rate hike, I can see this being the start to many more on the horizon throughout 2022, which should only increase TD's profitability further as long as demand for loans remains strong. And as for valuation, I think that a PE ratio of 12 is about average for TD, but based on their future earnings growth rate of 17.5%, it actually looks very cheap. We also can't forget about the dividend that was just increased 13% in Q4 2021, which should only continue growing for years to come. So honestly, I'm inclined to start buying TD Bank stock because I don't currently own it in my portfolio, but it does look very attractive right now. However, I do also think there are better growth opportunities out there for someone like like me with a higher risk tolerance like Tesla and Google stock. But for anyone with a lower risk tolerance and wanting to make some capital appreciation on top of some really good dividends, I think that TD stock is a solid buy. Anyways, those are my overall thoughts on TD's recent acquisition and their Q1 2022 earnings, so I hope you enjoyed. And if you did, please consider hitting that like button to help support my channel, and if you have not already, please consider subscribing as well so you don't miss any of my future uploads. And leave a comment if you want me to compare TD stock with all of the other major Canadian bank stocks. I think it would be a pretty cool idea, but let me know down below what you think. And with that said, I will see you guys in the next one.